Good afternoon, everybody. Welcome to the closing bell here at MarketStream.live. It is Wednesday, the second to last trading day of the week. Remember, we are closing after tomorrow. Friday is a holiday, Good Friday. We will not have trading, but today's action was muted at best. Yes, we had the major averages all down, including those small caps. We have volatility up, but it was muted action. It was really range bound, light volume, both in the midday and for the total day. Again, light volume this week, and that's expected with this holiday week. A lot of spring breakers and so forth. Right now, basically, looking at the Dow Jones down 59 points today at 20,591. It challenged early in the session the 50-day moving average, but it never broke it. If it did, it was for a brief period down at 20,553. At this juncture, we're all waiting for the earnings announcements. Yes, we have the geopolitical issues. We also have the Trump administration trying to get some sort of traction with any type of policy that was really the catalyst for the rally after the election, and we just haven't seen anything. So you can see that the market's just basically grinding along. Today I tried to do a couple things with the Euro FXE, tried to do some stuff with the spiders, SPY or the S&P 500. There were a couple earnings plays with JP Morgan, Wells Fargo, and Citigroup that we were trying to get some positioning on. But at the end of the day, there wasn't much to do. I wasn't forcing it. And that's the whole point right now is that environments like this is not a time to start forcing trades. With that being said, taking a look at the S&Ps, again, finishing in that grind right off of the lows. We're going to watch the open tomorrow. 2340 is going to be a level that's going to need to be held by the bulls. Break there means that you could see some downside. The NASDAQ was under pressure all day. Large cap tech just could not catch a bid. The Apples and so forth were just not finding a bid. Amazon, Google, all being challenged to the downside. You had the Russell down the largest. There was an impressive move to the upside, but again, with no domestic catalyst as far as infrastructure, tax reform, healthcare, job growth, wage inflation, nothing that is really ringing the register as far as giving a catalyst to the bulls. The domestically centric small caps pulled back pretty dramatically, down 1.29%. That's a canary in the coal mine. With VIX trading at 1580 at levels that we have not seen in 2017, nor have we seen basically in the last 6 months. As I had noted, you have the IV rank for volatility at around 70. So you have a heightened expectation of big violent moves, specifically in the S&Ps. We're going to see if that plays itself out. The S&Ps are pricing in some decent moves going into the last trading day this week and the earnings announcements with JP Morgan, Wells Fargo, and Citigroup. So let's actually look at JPM. Was trading today down 33 cents at 85.40. Right now, the options, and there has been a bearish trend right now for this big bank. They will be announcing before the market hours tomorrow. The bonds have been lagging, right, as far as yield is concerned. The 10-year has come from a high of 260, which was right around here, in the beginning of March. We've seen that pull back, and you see that the 10-year is trading at below 230 on yield. That means the bond prices are going up. That's not good for financials, and you've seen that financials were lagging, and then they were consolidating, and now they've pulled back a little bit today. We see after hours it's down about 3 cents. The options right now are pricing in, going into the announcement tomorrow morning, about a 1.86% range for JP Morgan tomorrow. That's basically a $1.59 either up or down that's being priced in. So you can see it as high as basically almost $87 to as low as down to 82 and some change, or 83. So you're seeing a pretty decent move, over almost a 2% move being priced in. Taking a look at Wells Fargo, and again, tomorrow morning you're going to be able to see how accurate that option pricing is. But taking a look at Wells Fargo, Obviously, with all the headlines that have been coming out, the stock basically has been trading. That's not what I wanted. WF. Let's see, what is Wells Fargo? I'm like now blanking on WFC. Interesting. Yeah, WFC. No, that's not what I want. I don't know why it's not coming. Here we go. Wells Fargo has been trading on the downside, especially since there was a clawback of the bonuses of the two fiduciaries, the CEO and the head of the services unit that was in head of sales. They had both their bonuses clawed back pretty considerably. Stock was down 1.92%. To put this in context, the options were only pricing in about a 1.1% move in the underlying going into earnings. Stock's already down 2%, almost 1.19% down $1.04 today at 53.12. Let's see if this starts to pick up. It's definitely in a bearish trend. Again, with the yield curves now starting to flatten out where the 10-year is dropping faster than the 2-year, there seems to be a little bit of caution being thrown out as far as anticipation of not only interest rate hikes and consideration of interest rate rises, but also growth. They're putting some question marks in that, and specifically in finance. With tax reform still not looking like it's going to have much of a shot getting done in 2017 at this juncture, you're seeing a lot of the bullets that the finance sector was banking on, no pun intended, are not actually following through. And then finally, taking a look at Citigroup. Citigroup's been trading very tight, tightest of the three banks. It's in a very tight consolidation, but still below its 20 and 50-day moving averages. But it has not been as in deep of a downtrend as Wells Fargo and JP Morgan Chase. Right now, Citigroup is pricing in about $1.16 or about a 2% range going into tomorrow's earnings announcement. Stock was trading down 52 cents. It's up 11 cents right now after hours, so it's taken back about a quarter of its pullback so far in the after hours, trading at 58.62. The bulls are going to want to see that 50-day moving average retaken if they're going to have any chance to see some upside catalyst, and we're going to see if the earnings could be that catalyst. Finally, taking a look at the volatility index. VIX continues to just rise. This is definitely a red flag for the markets. It's consistently making higher lows and higher highs. It's settled again above that 1550 mark at 1580. This is something that you're going to want to keep an eye on. A settlement above $16 is going to put it at a level that we haven't seen since 2016. As a matter of fact, we haven't seen it at that level since it initially popped, and that was back in November of last year when we saw the brief pullback in both the S&P's, Dow Jones, and the NASDAQ. There's obviously a lot of headline risk at this juncture, plus we're in the earnings cycle. Anything that comes out that might be construed as remotely negative on these earnings that are going to be coming out tomorrow morning in this offensive sector finance, that could put volatility even going higher, and it could put the bulls on their heels at this juncture. So we're going to watch that very closely as well. All right, folks, that is it right now for the closing bell. Go back and take a look at all the action that we've been talking about in the latest videos. If you also want to go check out on our Facebook page, that's facebook.com/MarketStream. Take a look at all the videos that are posted here. We have them all here. So if you're waiting for updates on the website, you don't see the most up-to-date videos on the website, go to our Facebook page, facebook.com/MarketStream, or you can just type in MarketStream from your Facebook page, and you're going to be able to get all the action that we discuss here at MarketStream.live. All right, folks, have a great evening, and we will talk to you soon.